Welcome to this elite, high-energy explainer masterclass. Today, we are completely deconstructing the Cambridge AS and A-level accounting exam code, specifically looking at syllabus 9706, and we're doing it directly from the examiner's lens. Listen, we are targeting one of the most notoriously misunderstood topics in the entire curriculum, goodwill, and specifically the critical, absolute deal-breaking distinction between purchased and inherent goodwill. As a master coach, I know exactly where candidates bleed marks on these high-tariff questions. It is literally my job to know. By the end of this deep dive breakdown, you are going to know exactly how to dissect complex prompts, how to allocate your time flawlessly, deploy critical thinking strategies, and absolutely guarantee that you are hitting those top-tier assessment objective bands. So grab your notes, get focused, and let's dive right in.
Okay, let's look at our structured blueprint for today. We're going to systematically equip you with the tools you need. We'll cover 1. The Cambridge A-star difference. 2. Defining goodwill concepts. 3. The method mark concept. 4. Top examiner warnings. And finally, number 5. Mastering critical evaluation.
All right, Section 1, the Cambridge A-star difference. We're starting with the highest stakes possible, because understanding exactly what Cambridge examiners are looking for, well, that's literally half the battle.
This quote on the screen, it gets right to the heart of the matter. Mastering the nuances of goodwill is the ultimate separator between an average score and an elite A-star score. You might be wondering, why is that? Well, because goodwill isn't just some standalone, isolated calculation you do on a Tuesday and forget about. It is a fundamental conceptual thread that weaves through partnership changes, massive company acquisitions, and core accounting frameworks. Now, when you really analyze the principal examiner reports, a glaring, painful pattern emerges every single year. Students fundamentally misunderstand what high-tariff questions, those massive 9 to 15 mark behemoths, are actually asking them to do. Let's do a quick anatomy of command words here. The biggest trap in the exam room is confusing the command word analyze with the command word evaluate, or confusing explain with to what extent. If a question asks you to analyze, it wants you to break down the goodwill concepts into their constituent parts. You take the data, you pull it apart. But evaluate? That is a whole different beast. Evaluation requires you to actually judge the significance of the accounting treatment, weigh up completely different perspectives, and come to a highly justified conclusion. You are not just stating facts anymore. You are making an academic, professional judgment within a specific hidden context, like a business acquisition. To put this into perspective, imagine two candidates. Let's call them Alex and Sam. Alex is highly technical, brilliant at formulas, but strictly factual. When asked to evaluate, Alex just lists the calculations. Sam, on the other hand, is a creative thinker, strong at arguments, but maybe struggles with structural precision. To get the A-star, you have to merge both. You need Alex's technical precision and Sam's broad evaluative reasoning.
Moving right along to Section 2, defining goodwill concepts. Let's build a theoretical foundation we need before we even think about looking at a single calculation.
Now, what's really fascinating about this breakdown is that it explicitly shows that examiners aren't just looking for memorized flashcard facts. No way. They demand absolute mastery across 3 distinct cognitive domains: knowledge and understanding, analysis, and evaluation. In Cambridge speak, you know these as assessment objectives A01, A02, and A03. Let's think back to our hypothetical students. An average student, maybe our technical expert Alex on a bad day, relies purely on factual recall, which is just A01. They read the prompt and write, "Goodwill is an intangible asset." Boom, done. They expect full marks. But to unlock those top-tier marking bands, you absolutely must demonstrate evaluation, which is A03. You need to discuss the why. Why is inherent goodwill, which is the stellar reputation a business builds up internally over 20 years, never, ever recorded in the books? You can't just say it isn't. You have to actively address the prudence concept. You have to bring in the historic cost convention, which dictates exactly why internally generated goodwill cannot be reliably measured. The examiner wants to see you connect those dots.
So, drawing a hard line between purchased and inherent goodwill and making those crucial cross-topic connections is exactly what elevates your score from a B to an A-star. Listen, it is nowhere near enough to just write out the mathematical formula for purchased goodwill. You have to explicitly and aggressively contrast it with inherent goodwill. You need to clearly state on your exam paper that purchased goodwill stems from an objective, verifiable valuation transaction, meaning a third-party purchase actually verifies its worth in the real world. Inherent goodwill completely lacks this verifiable transaction, and that, right there, is exactly why IAS 38 intangible assets strictly prohibits its recognition on the financial statements. By comparing these two concepts directly, you establish the exact causal relationships that the Cambridge principal examiners are practically begging to see. You're showing them you don't just know the what, you know the why and the rule behind it.
Okay, Section 3, the method mark strategy.
With the dense theory locked in, we now absolutely must establish the strict technical methodology you need to secure marks on the actual paper.
This right here brilliantly illustrates the deconstruct, solve, evaluate workflow. You must use this to systematically tackle any data interpretation on your exam. But okay, right before we tackle the absolute hardest part of this workflow, that transition between solving and evaluating, I want to quickly pause our session. If you are serious about cracking these Cambridge codes, you need consistent strategy. I want you to hit that subscribe button for the channel Ace the Exam's IGCSE O and A levels at the handle @AceTheExam_IGCSE. Turn on all notifications, hit that bell icon so you never miss a weekly Cambridge breakthrough strategy. We are dropping high-level hacks every single week, and you don't want to be left behind. All right, let's jump back into the workflow. So where do students hit a massive roadblock? It's right there at the end, transitioning from step 2 to step 3. You've solved the math perfectly, you've defined the terms, but suddenly you realize you only have 5 minutes left on the clock and you haven't actually evaluated the results for the stakeholders. Panic sets in, right? The cognitive strategy I teach to get unstuck here is what I call the analytical framework pivot. When you hit this wall, you have to stop trying to write a descriptive summary of what you literally just calculated. Stop doing that. Instead, pivot directly to the stakeholder impact. Rather than writing a weak, generic conclusion, you transition to something incredibly sharp like this. In advising the directors, recording purchased goodwill will initially increase the non-current assets, strengthening the firm's asset base. However, this asset is critically subject to annual impairment reviews. If the acquired business underperforms, writing down this goodwill will severely impact future profitability. Do you see the difference? You've directly linked a static concept to the director's future, dynamic financial statements. That is an A-star pivot.
Now, by applying this exact procedural framework on screen, you leverage the method mark strategy. This means you are literally securing valuable, easy points simply for your structural process. Whether you are writing out a long-form essay or calculating the goodwill in a complex ledger account, the conventions are incredibly strict. You must use proper headings. You must use correct terminology. Please do not just casually write the extra money paid in your answer. No, call it the premium on acquisition or purchased goodwill. Use the professional vocabulary. Appropriate formats and crystal clear annotation show the examiner exactly how your brain is working on the page. And let me tell you why this is absolutely crucial. Even if your final calculation is off by a few dollars, maybe you made a silly arithmetic error because your heart is pounding and you're under immense exam pressure, if your procedural framework is flawless and your steps are clearly annotated, you will capture the vast majority of the method marks anyway. This is exactly how smart, strategic candidates buffer their scores against math mistakes. They let the structure save them.
Section 4. Top examiner warnings. All right, let's step right into the absolute minefield. We are going to look at the exact places where good candidates lose easy marks. It is vital, and I mean absolutely vital, that you avoid these traps. I want to do a quick interactive workshop right now, a little pause and practice. I want you to visualize a scenario. Imagine Company A acquires Company B for $500,000. Company B has non-current assets of $300,000, inventory of $50,000, and trade payables of $20,000. To find the goodwill, you must remember to subtract those liabilities. So your net assets equal $330,000. You take the $500,000 purchase price, subtract the $330,000 net assets, and that gives you $170,000 in purchased goodwill. Now imagine a student writes this exact sentence as their final answer. The goodwill is $170,000. This is an asset. Look at the examiner warnings on your screen. Can you spot the 3 massive flaws in that student's answer? Let's break it down. Flaw number 1. There is absolutely no presentation or working shown. The examiner cannot see how the student logically arrived at $170,000. They just magically dropped a number. Flaw number 2. Poor, sloppy terminology. Saying this is an asset is way too vague. It should explicitly state it is an intangible, non-current asset. Flaw number 3, and this is the biggest killer. It is a completely generic answer. It doesn't mention Company A or Company B at all. You have to link it back to the specific context given in the prompt. Do not under any circumstances fall into the trap of completely ignoring the exam stimulus just so you can recite a textbook definition you memorized the night before.
Finally, we've reached the summit. Section 5. Mastering Critical Evaluation. Let's figure out how to step beyond the basic math and actually step into the mindset of a chief financial officer.
This question right here is the ultimate key for breaking into the highest possible scoring bands on your exam. How do you actually demonstrate evaluative thinking? Well, it is not just about writing 2 lists side by side. Evaluative thinking requires a deep comparative analysis where you actively weigh the validity of different accounting treatments against the fundamental principles of the subject. It requires judgment.
So, how do you practically do that on paper? Top-scoring candidates achieve this by rigorously following these exact 4 steps. First, you must identify similarities and differences.
Don't just contrast. For example, you could point out that both purchased and inherent goodwill fundamentally represent future economic benefits to a firm. Second, you have to use comparative connectives to steer the examiner through your logic. You write phrases like, however, unlike purchased goodwill, inherent goodwill lacks a verifiable transaction. Third, you support this claim with hard evidence pulled directly from the provided stimulus text or data table. Don't invent scenarios, use what they gave you. And finally, step 4, draw justified conclusions. You do this by using structural phrases like on the one hand, conversely, and ultimately. This means that for the stakeholders, these specific structural choices actually force your brain into an evaluative mode, ensuring you purposefully climb out of the descriptive AO1 trap, move through the analytical AO2 phase, and secure those top-tier AO3 evaluation marks.
Let's synthesize this entire masterclass into 3 core, highly memorable pillars for you to take into your next exam. Pillar number 1, the 3-step question scan. You must always isolate the command word, extract the specific content knowledge required, and identify the hidden contextual constraints before your pen even touches the paper. Pillar number 2, the paragraph balance formula. Ensure every single analytical paragraph you write balances AO1 knowledge, AO2 application to the specific scenario, and AO3 evaluation of the final impact on the business. If our hypothetical students Alex and Sam worked together, this is the exact balance they'd achieve. Pillar number 3, the last 5 minutes review checklist. Always do a final sweep to ensure you have proper headings, correct terminology, clear annotations, and, most importantly, that you have explicitly answered the exact question asked, not the question you simply wished they had asked. Mastering these strict frameworks isn't just about passing an exam, it's about deeply understanding the true underlying value of a business. It requires consistent strategy. So if you want to crush your Cambridge exams, you need to subscribe to Ace the Exam's IGCSE O and A levels at the handle @acetheexam_IGCSE. Hit the notification bell right now for future exam hacks and drop a comment below with your exact target grade. Put it out there. I'll leave you with this provocative thought. The next time you see a massive corporate acquisition in the news, ask yourself how much of that billion-dollar price tag is just purchased goodwill, and what on earth happens to their balance sheet if that glowing reputation suddenly disappears overnight. Keep analyzing, keep evaluating, and I'll see you in the next explainer.